Thank you for joining us. Don't change that channel. This is Wealth in the Winner's Circle with Harley Shanklin of the RDW Financial Group. I'm Spike Spangle. Harley, good to see you. What is on your mind this week?
So, Spike, what's on my mind this week is just all the mistakes that happen when it comes to retirement planning. The top mistakes that we see. That's really what has consistently been on my mind, because it's something that we just obviously handle and run into a lot on a regular basis. It's just these kind of common mistakes that we often see everyday Americans making.
Yeah. And to try to empathize with them and understand, but as a financial advisor then, talking about those mistakes today on the program, we're going to hopefully help you, the viewers, avoid making these mistakes. Number one on your list that you shared with me is procrastination. This is one that we can control, right?
Exactly. We can take a proactive approach to it rather than a reactionary approach to it. And, you know, the example that I often like to use with this, and I think this is important for all of our audience out there watching today, especially maybe for the guys out there, is when it comes to our health and those regular doctor visits and checkups that we should be making, but that we're probably not. And I know I am very guilty of that as well. I don't go and see the doctor until something's wrong. And for those of you sitting at home, ask yourself that same question is, am I delaying things that maybe I should have checked out, but I'm maybe a little bit fearful? And I think it comes to the same thing when it comes to your retirement and how prepared you are. It's something that you all know you should be doing. We all know we should be doing it, Spike. But there's sometimes a little bit of fear that comes along with that, to hear something that we don't want to hear, that fear of maybe we haven't done enough. But it really starts with having that initial conversation. And what I have found is that through our process, it's a very enjoyable experience, and people walk away with a ton of value and no regrets having done it.
Yeah. The journey of 1,000 miles starts with the first step, right?
Yep.
We just got to get going. We totally understand, but don't feel bad about what you think you have or have not saved. Don't think that you're the only one out there. Millions of Americans feel like they're behind. But if you're watching this program, you're in your 50s, even your early 60s, there is a lot that you can do. There are catch-up contributions. You can start doing some extra saving. Hopefully the kids are starting to pay off their college loans on their own or whatever it might be. There is a lot you can do, and I just want you to know you're not alone. You can catch up. I'll tell you what, here's something free right now that you can do to see where you're at with your retirement planning. We've got a quiz that we've put together for you. Absolutely no cost to it. Go to the rdwretirementquiz.com. You can type that into your browser. You can open up your phone to the camera function and scan this QR code. No cost to you. Let's see how prepared you are, at least get you going in the right direction. Feeling like you haven't saved enough. Sometimes it's a nice surprise when people come in and you can tell them, it looks like you're doing pretty good so far.
Oh, yeah, Spike. You know, unfortunately, too many times we are our own worst critic, and we're criticizing ourselves within a vacuum, because the reality of it is for all of you out there watching, how much do you actually know about the people you're comparing yourself to and their financial situation versus yours? And Spike, what we oftentimes find is that people are in a much better position than they think they are. And the earlier we can help them determine that, the better their retirement can be, because we help to grow that confidence that's needed to make that transition from their working life into retirement. And we do that through our retirement start planning process. And obviously the first way to do it is through that rdwretirementquiz.com out there. For those of you who may be wondering, that's a great place for you to start. Scan that QR code, take that test, Spike. It takes about 5 minutes to get through it. That's a great way to get started on that. Yeah,
and it's also funny to me that the top on your list was procrastination, and the name of your process is START. Just get started. Just get started. It's okay. Now, here's the thing, though. Your 401k provider, your company, 403b, 457, your TSP, they're not probably reaching out to you saying, hey, it's time for you to get started on it. You're saving money into there, but you really do need somebody, whether it's us, whether it's someone like us, but somebody who does retirement planning all the time to get started with. Someone, we were talking about this as we were having dinner last night, is, sometimes having that trainer, but the right kind of trainer. There are all kinds of physical trainers when you go to a gym. And what is the goal of what you're trying to do? Are you trying to bulk up? Are you an Olympic athlete? Or are we just trying to keep Father Time away from taking its toll against us on there? But having the right kind of financial trainer. So maybe tell us a little bit about the START process. What are we focusing on? Are we focusing on still growing assets? Is it absolutely decumulation? There's a difference between those two.
Correct. And that's oftentimes where folks will get a little bit mixed up, is the idea of like, well, I've spent all my working years accumulating and now I got to deaccumulate. We want to try and be able to strike a balance between that, because for all of you out there, I don't know how long you're going to live, but I want to make sure that I am helping to put together a plan for you that is built for whether you live to age 85 or age 95. I want there to still be gas in the tank so you can still run your retirement race. And it's exactly right. There are a ton of great advisors out there, great trainers out there. The importance is finding the one that works best for you, that has that process. For us, it's that retirement START process where we look at your secure income, which includes your Social Security pensions. When and how is the best time to take it? How can you maximize it? Your tax efficiency, making sure that you're not paying too much in taxes. Your advanced planning, making sure that your estate plan is in alignment. Do you need a will or a trust? And how is your estate going to pass without having to go through probate? Risk management, looking at that risk to your life, health, and investments, ensuring that you're not taking too much risk in any one of those areas, to then build that tailored investment strategy to help propel you into retirement so you can start it successfully. All right.
We're going to put together a very quick message. You've got some important information about the firm here. Folks, call that phone number right now on the bottom of the screen. Let's get you started on your START process. Procrastination. It's one of the biggest things that is a hurdle to people being able to be and stay retired. You're watching this program right now. There's a reason why you're sitting there. The karma is happening. Let's take charge of your retirement right now. Call that phone number. We're going to be right back with Harley Shanklin right after this.
All planning starts with show me your junk drawer, 401ks, IRAs, life insurance policy, who knows? And they think they're doing well, but they don't know. There are probably a dozen or so pieces, but our goal as advisors and what we do in our firm is we bring it all together. We have what we call the START program. We can bring all of these components together and then lay it out for them and literally give them, if you will, a roadmap of how they're going to get from here to there. You know, if you're going to run the Indianapolis 500, you just don't show up with a car on race day and go, whoa, I like to win. You have to look at all the components, the chassis components, the engine, the tires, what's our pit stop strategy, how much fuel are we going to need? So we take all of those and put them together in our START process. And when they come out the other side, they say, okay, I see where I need to go.
Imagine not having to face your retirement with the same old corporate solutions as everyone else. In these economic times, you deserve a fresh perspective that includes a personalized income plan and tax map from an independent fiduciary advisor whose focus is on you. Call the number you see here to schedule your complimentary review.
Welcome back to Wealth in the Winner's Circle with financial advisor Harley Shanklin of the RDW Financial Group. Some of our retirement planning mistakes, this was really interesting to me. I thought you were going to say maybe not having a proper portfolio strategy, not getting the right kinds of gains from your portfolio, having the income plan. And the next thing you put on the list was ignoring inflation. Really? Well, first of all, I think it's been hard to ignore inflation the last couple of years. But what do you mean when it comes to a plan?
So what I mean by a plan is a plan that factors in how much your income is going to need to increase over time. Because you're right, Spike. You know, we've all been reminded in the last few years that inflation is real and it is having a real impact on things. But unfortunately, so many retirement plans were built prior to this big rise in inflation that we've had. And even before then, that was one of the things that we really banged our drum from the mountaintop of saying we need to make sure that we're factoring in inflation over the long term, because it can have a dramatic impact. The funny example is I use Twinkies as an example.
The Twinkie inflation.
The Twinkie inflation, just using something like Twinkies, the price of Twinkies has increased by something like 1,000% over the years. And if I understand that we're not out there, I hope you're not all out there buying Twinkies all the time and consuming them. It's just a fun example to once again remind us how much kind of these simple things can really increase over time. And if you out there are not taking that into consideration, can have really a detrimental impact. And so I always ask you, sit down, think about all the things that you're purchasing in your life. Have you started to notice a bit of a strain on your monthly finances? And if so, that's a great reason to sit down, have a second opinion. If you've already had a plan, if you've not had a plan put together, even more important, to schedule an appointment with us, sit down, we will take you through our START process and build a plan that factors in inflation.
Some of those costs, there was an article going around the office this morning. Monthly car payments, close to $1,000 right now. What does that also do then to your insurance costs on your automobile? And you might say to yourself, "Oh, I'm never going to spend that much on a vehicle." What happens if something happens to your vehicle? We're probably going to replace vehicles in a 25 to 30-year retirement. We talk about downsizing of homes, but real estate is incredibly expensive. I don't know if that downsized home here in Indiana is that much less expensive than the home we purchased 25 or 30 years ago. I mean, everything is that much more expensive.
I mean, everything. And I, Spike, I like to use the term when it comes to downsizing, right-sizing in retirement.
Yeah.
Going from maybe a home that's become too big because we raised our family, but now we're empty nesters, and now it's time to right size to something that's more going to fit our lifestyle in retirement. And continuing on that conversation of inflation, why it's important not to ignore it is Social Security.
Yeah.
Right? We often talk about Social Security and the heavy reliance on Social Security when it comes to our retirement plans. And for many of you out there, there's maybe some fear surrounding some of these dates that are looming out there. Maybe you've heard about 2034, that the government is only going to be able to pay about 75% of their obligation. Have you asked yourself out there, what sort of impact is that going to have on me in retirement? If you're not already retired, or maybe you are in retirement and receiving Social Security, those are things that we want to factor in, because Spike, the fact of the matter is, for most Americans out there, Social Security is only going to cover about 40% of their income needs. And what we already know is that the increase in Social Security, those cost of living adjustments, are not keeping up with inflation. And it's never guaranteed in any one year. Some years we may have an 8% increase like we saw a couple years ago during the COVID time frame. And we've had other years where there is no increase in inflation.
Here's something that, tell me if I've got the right perspective on this, because yes, there was a very large cost of living adjustment on Social Security when inflation was really high. But that came a year after we already went through the high inflation, meaning you already go through that spending. A year later, you get a cost of living adjustment, but you're kind of a year behind. I mean, it's nice that there was an adjustment, but you've already spent the money on higher costs of goods and services before that.
Oh, yeah.
So the Social Security alone, while there are cost of living adjustment possibilities, I don't think it helps keep pace with inflation all of the time.
No, it doesn't. And Spike, the other thing, we're talking about Social Security and inflation here, the other part that we have to add into that is Medicare. Because did you know that the only way they can increase your Medicare Part B premiums is if they also give you a cost of living adjustment on Social Security?
So it's like a wash. So you get an increase on your Social Security. And my father was the first person to say that to me one time before, and it hadn't really registered until you said that, because he said, "Yeah, we got a cost of living adjustment, but my Medicare went up." I'm like, "Oh, okay, well, I mean, they're two separate things." No, they're not. They're kind of because usually your Medicare payment is, for most Americans, you take it out from your Social Security. So yeah, you got a cost of living adjustment, but your medical costs went up too.
Exactly. Oftentimes those increases that we see in Social Security are simply wiped out by those other increases that we see. And that's why it's so important through our retirement START planning process that we factor that in and look at how can we increase your income. right? And that's what we do for everyone who chooses to sit down with us, is we will take you through our systematized retirement start planning process to ensure that we have a plan in place so your income can increase over time as you go through retirement. So you're never left worrying or wondering, hey, how am I going to be able to afford my lifestyle with all these prices going up on the goods and services that I'm purchasing? So for those of you sitting there that have had those concerns, that's a great reason to give us a call, schedule an appointment, let us do a second opinion for you where we can take you through that retirement start planning process and make sure that you are on the right track. No cost to you. This is a free consultation. We will sit down, answer your questions, and see if it makes sense to build that detailed retirement income plan that you need.
You can call that phone number on the bottom of the screen, or you can scan the QR code. If you've got your phone open right now, open it up to the camera function, point it at the box here, and just click on it. You can schedule your own appointment whenever you want to. You don't even have to pick up the phone. As we're trying to figure out, you had next on the list is some of the top retirement mistakes you see is, of course, the wrong investment portfolio. What is the wrong investment portfolio? Is it taking too much risk? Is it not having enough risk? Is it having too high of fees in the funds you're using? What is the wrong portfolio?
And that's the tricky question, Spike, is there is no right or wrong answer per se, right? As far as from a general population perspective, everyone out there watching today, you are all different and you all have your own individual needs when it comes to retirement, being how much income you're going to need, how much risk you are willing to take, or more importantly, how much risk can you actually afford to take. And many times what we see is that Americans are going into retirement with the same investment strategy they had during their working years. Is that you? Have you actually changed your investment strategy? And this is especially important for those of you watching who are maybe within 2, 3, 5 years of retirement. Now is the time to start looking at some of the opportunities that may be available to you, either inside your plan or outside of it, to help to start to avoid some of those mistakes as you approach retirement, to make sure that you are and will remain on the right track to make you successful in retirement.
Harley, you can look down at somebody's complete portfolio of investments and you can kind of tell what looks like risky, where it's a little bit safer. How many times do people come into your office, tell you I'm a non-risky person, or I'm okay with portfolio risk, and it actually doesn't match with what their own personal selections are? Because, they're the ones choosing what goes into their 401ks, their 403bs. So you have Susan who comes in, saying, I'm very risk averse, and you're like, that's not what's happening in your portfolio. Does this happen sometimes?
Oh, it happens all the time. And once again, this goes back to the idea that we're all different from each other. And so your definition of risk may be different than my definition of risk. And for those out there watching, what is your definition of risk? It very well may be different than mine or your neighbors or your brother-in-law or sister-in-law, whoever. That's why it's very important to establish what does risk mean to you, and then work backwards from there to make sure you understand, one, how much risk you're currently taking in your portfolio today, and two, are there adjustments that should or need to be made to create better alignment within them?
Right. And we can help you take a look at that risk in your portfolio at no cost to you. It is part of your retirement readiness review. You can do that right now. Call the phone number down on the bottom of the screen. We have operators standing by. There's no cost. There's no obligation. They're just going to ask you what time would you like to come in. Probably be in the office for a good hour, maybe even 90 minutes. And then we'll probably send you home, take a look through your portfolio, through your choices, your insurance, and see if there are some adjustments that need to be made, and then we'll have a second conversation with you. But to get started on your process, it is no cost to you. Dial that phone number right now so you can get started with Harley Shanklin of the RDW Financial Group. More of Wealth in the Winner Circle right after this.
One thing I think that sets us apart is our focus on education, and not only for ourselves professionally, but also for our clients. So within our office, we have an education center where we're able to hold monthly events and present on various financial topics, but we also bring in outside experts. So when it comes to things like estate planning, we want to have an estate attorney come in, talk about wills, talk about trusts, the importance of powers of attorney and things like that. We have a CPA that comes in to talk about taxes. And then we also do fun events. We've done wine and canvas nights where we have the clients come in and we all get to paint pictures and with a nice glass of wine. We've had mixologists come in and teach us how to make our favorite drinks. People with travel, gardening, we do all sorts of stuff because we want to make sure that our clients are getting educated in the ways that are important to them, whether it's their finances or those fun things that they may have wanted to try but haven't actually had an opportunity to try it. Did you ever think your retirement would be shared with our government? It's true. Your 401k, IRA, pension, or similar retirement accounts are in partnership with Uncle Sam. Simply put, they want their tax dollars and you have them. With our latest tax calculator, you can plug in your own numbers while sitting at home. To see what your tax liability to Uncle Sam will be, scan the QR code or go to rdwtaxtest.com.
Welcome back to Wealth in the Winner's Circle with Harley Shanklin of the RDW Financial Group. I am Spike Spangle. We're talking today about some of the retirement planning mistakes that sometimes you see, and we're trying to help you hopefully avoid. What I'd like to actually do is if we can bring that back up, talking to our producer in there, the rdwtaxtest.com and what that means. One of the biggest mistakes you say as a financial advisor is not having a tax strategy for retirement. How does the tool help?
So Spike, what the tool helps us to do, it's a very simple tool that anyone out there watching today can take very easily. It only takes about 5 minutes. You enter in some simple data, and then it shows you what your potential lifetime tax bill is. And I know you may not have realized that you have a lifetime tax bill on some of those retirement accounts, but the fact of the matter is Uncle Sam and our Aunt Iris, they are waiting to be paid. All those tax dollars you've been deferring into your 401ks or traditional IRAs, you're going to start pulling those dollars out and paying taxes on it. So the question is, what should you be doing today to help lower that tax bill for you, your spouse, and your heirs going into the future? Because we just don't know what taxes are going to do in the future. I know we've had recent tax updates to the regulatory codes and everything, but we don't know how long those are going to last or when they're going to change. And so it's important for you out there watching to take a proactive step to start getting, one, a better understanding of what that lifetime tax bill looks like, and two, what sort of opportunities or strategies can you be implementing? And that's where our team at RDW Financial Group comes in, where we stand ready with our whole team of advisors, where we will help you analyze your current tax situation, any investment accounts you have, and what that may mean for you going into the future and how you can start to address it today.
In sort of a real life kind of example, let's say you have $500,000 in tax-deferred 401ks, even money that then you've rolled into your own IRAs. One of the biggest disconnects is somebody will come into your office, and let's just stick on that on one person. They say, oh, I've got $500,000 in savings that I can start to use. I'll turn on Social Security. My spouse has got savings. We've got over $1 million. We've got the house paid off. But first thing that you say to them is, you don't really have $500,000, not $500,000 of spending. You've got $500,000 on a statement, but unless you were putting that into Roths, you don't have that in spendability. So the tax plan is knowing how much you've actually got to pay on taxes on those accounts, yes?
Exactly right. And when we use the example of a $500,000 pre-tax account like a 401k or traditional IRA, we typically see a tax liability in there of upwards of $200,000, $300,000 over an individual's life expectancy in retirement. And so we can start to address that now. And that goes back to that mistake number one of procrastination, Spike. We don't want to procrastinate that tax bill, right? That's a tax bomb that we're all carrying in those pre-tax retirement accounts that you all may have out there. Is by not taking proactive steps, you are guaranteeing yourself for that tax bomb to blow up at some time in the future. So it's important that we start chipping away at that right now to lower it as much as possible in the most efficient way without upsetting the other factors and things that you're doing in your life or that you want to do in retirement. Spike, a great example we talked about last night at dinner is, Dave Ramsey out there giving great advice on how to reduce debt, but this idea of you have to go into retirement debt-free. And oftentimes one of those mistakes that we see is folks drawing from these pre-tax accounts with the sole purpose of trying to get rid of debt. And that doesn't always make sense. It's not to say that we don't want to get rid of debt, but there are efficient ways to do it, and drawing from those pre-tax accounts is typically not the best way to do it.
Totally understand, especially if you had already refinanced your mortgage. Like if you have a lower interest rate, let's say 3 or 4 or even a 5%, but taking money out of a market which over time could, even if it made 6 or 7%, just to call yourself debt-free, it's like, we get it. And we get the emotional feeling of, oh, I can't wait to pay off the house. But you know what? You can have some patience there. If you've got a lower interest rate, let the markets do what they're going to do. Continue to pay that thing off. I think maybe to what he's speaking about is make sure you always have bad debt gotten rid of.
Exactly.
You want to get rid of your credit card debt or any of the high interest rates.
And we have some great clients, Dennis and Andrea, who, I originally met with a number of years ago, and when they sat down, they had their retirement date that they wanted to do, but there was a number of debt liabilities that were out there that we needed to address before that. We're able to put together a plan to systematically reduce that bad debt that they had out there to get them to the point where they were able to retire at the date that they wanted to. And it was all because they didn't procrastinate. They came in, they scheduled that appointment, just like for all of you out there who may be struggling with some of these questions and concerns, just like Dennis and Andrea were, we're able to put together that plan. That's what we want to do for you out there. So give us a call at that number you see on your screen. Take out your phone, use the camera, scan that QR code, schedule an appointment. We have a whole team of operators standing by to help you get the appointment scheduled, free consultation where we will take you through our START process, help identify those key areas that we can help you with to help you avoid those 10 mistakes that you don't want to make so you can retire successfully, just like Dennis and Andrea and so many of our other wonderful clients out there.
Just to review a little bit, some of the top retirement planning mistakes that you've seen as a financial advisor is not having a portfolio that matches what your real goals are, not having a tax strategy, over-relying on Social Security, and the number one, we'd start with procrastination. And it all starts with the START plan, actually getting started on it. We've got less than a minute here. Can you give us again just a quick review? What are all of the elements of that START? Investments, wealth, income, what else?
So every letter of the word START stands for a different piece of the process, and they're all equally as important. And it begins with the first S, secure income. And that's where we take a look at your Social Security, all of your fixed income sources to make sure that you have the right claiming strategy for you, not for anybody else, whether it be for Social Security or pensions. Then we look at tax efficiency, advanced planning, which is just estate planning, risk management, the risk to your life, health, and investments to help build that tailored investment strategy that's going to work in concert with everything, your Social Security, tax plan, estate plan, all of those things.
Harley Shanklin, thank you very much. And for our viewers, I hope you enjoyed watching what some of the retirement planning mistakes can be. Hopefully we can help you avoid them, but work with the team here of RDW, the financial group, right here in Indiana, so you can get started on your retirement plan. Let's help you avoid those mistakes. Call the phone number right now on the bottom of the screen. Thank you so much for watching. We'll be back next week.